Alright, let's talk about something you probably don't hear about every day: Haiti's real estate market. When you hear Haiti in the news, the conversation is almost always dominated by headlines of political turmoil, natural disasters, and economic hardship. It's a narrative that, while rooted in very real challenges, often paints an incomplete picture. It completely overshadows the complex, resilient, and surprisingly dynamic economic currents flowing just beneath the surface. One of the most fascinating of these is the property market. Now, when most people think of Caribbean real estate, their minds immediately jump to the glossy brochures of Barbados, the Cayman Islands, or the Bahamas. They picture turnkey luxury villas, sprawling tourist hotspots, and a straightforward path to acquiring a slice of paradise. But Haiti? It's a whole different story. It's a market that doesn't fit into a neat, pre-packaged box. It's less about manicured resorts and more about navigating a landscape of incredible contrasts. And honestly, it's way more interesting and frankly, more complex than you'd ever think. This isn't a market for the faint of heart or the casual speculator looking for a quick flip. It's a market for the patient, the diligent, and the visionary. It's a place where immense challenges coexist with profound opportunities, and understanding that paradox is the key to unlocking its potential. First off, to understand Haiti's market, you have to understand that it's unique down to its very foundations. The concept of land ownership itself can be incredibly complicated. Haiti operates on a dual system. On one hand, you have the formal state-recognized system of titles and deeds. On the other, there's a deeply entrenched informal or customary system, where ownership is recognized by the community and passed down through generations, often without any official paperwork. This dates back to the post-independence era, creating layers of historical claims that can sometimes conflict with modern records. This leads directly to the next major hurdle. Property records aren't always up to date or even available. The National Land Registry, the Office National du Cadastre, has faced monumental challenges. The devastating 2010 earthquake not only destroyed lives and buildings, but also wiped out countless physical records, turning an already difficult situation into a genealogical puzzle for landowners. Efforts to digitize and centralize records are ongoing, but they are slow and painstaking. This means that a title search isn't a simple online query. It's an intensive, on-the-ground investigation. Consequently, the process of buying or selling a house can take much longer than you'd expect in other countries. A transaction that might take 30 to 60 days in North America could easily stretch to 6 months, a year, or even longer in Haiti. It involves multiple steps, verification with different government bodies, and the crucial involvement of a trusted Haitian notary or who acts as a public officer responsible for the legality and registration of the deed. Every step is deliberate and requires immense patience. But here's the flip side of that coin, and it's a big one. These high barriers to entry mean there is huge potential for growth and significant returns if you know what you're doing. The complexity filters out the competition. For investors who are willing to put in the work, conduct exhaustive due diligence, and build a reliable local team, the lack of market efficiency is precisely where the opportunity lies. Securing a clear title on a well-located piece of land is like finding gold. As the country slowly modernizes its systems, the value of these properly documented assets is poised to increase dramatically. Despite the headlines, prices in key areas of Port-au-Prince have been surprisingly resilient. In upscale and secure neighborhoods like Pétionville, Montaigne Noire, or Vivi Mitchell, property values have held firm and over the long term have shown steady appreciation. This resilience is driven by a fundamental economic principle: a severely constrained supply of quality housing meeting a constant, non-negotiable demand. And rental demand stays remarkably steady, even in the face of political or economic challenges. This demand comes from several key sources. First, the international community. This includes diplomats, employees of non-governmental organizations, NGOs, and staff from multinational corporations. For them, security is the #1 priority. They create a robust market for a very specific type of property. They are looking for secure, well-built homes, often within gated communities. These properties feature reinforced concrete construction designed to withstand earthquakes and hurricanes, independent water sources like large cisterns, and reliable backup power from generators or solar arrays. Landlords who can provide this level of security and self-sufficiency can command premium rents, often in US dollars, creating a stable and lucrative income stream. Another massive driver of the market, and one that's often overlooked, is the Haitian diaspora. Millions of Haitians living abroad in the United States, Canada, and France maintain deep ties to their homeland. They send billions of dollars in remittances each year, a significant portion of which goes into real estate. They buy land as a long-term investment, build homes for their families back home, or construct retirement properties for their own eventual return. This constant flow of capital from the diaspora provides a vital and consistent source of demand for both land and construction services, acting as a stabilizing force for the entire market. Finally, there's the domestic demand from local business owners, professionals, and the Haitian upper and middle classes, who are seeking safe and comfortable housing for their families. This combination of expats, NGOs, businesses, and the diaspora creates a powerful and resilient niche market. It's not a market of millions of buyers, but the buyers who are present are serious and well-capitalized. Now, if you're seriously thinking about investing, you need to understand the financial landscape. In Haiti, cash is king. The formal mortgage market is virtually non-existent for the average buyer. High interest rates, the risks associated with unclear land titles, and general economic volatility make banks extremely hesitant to offer long-term financing for real estate. This means most deals are done with cash up front, and transactions are frequently priced and settled in US dollars to hedge against the volatility of the local currency, the gourd. As for the legalities, foreigners can own property in Haiti. The Constitution permits it. However, navigating the paperwork and ensuring a clean transfer of title is a minefield. This is not a do-it-yourself environment. You will absolutely need a good, reputable local lawyer and a trusted to guide you through every single step of the process, from the initial title search to the final registration of the sale. Their role is not just advisable, it is essential for protecting your investment. And don't forget to look beyond the capital. While Port-au-Prince is the economic heart of the country, some of the most exciting long-term potential lies along its stunning and largely undeveloped coastline. Haiti has over 1,700 kilometers of coastline, and its beaches are absolutely world-class. From the artistic vibe and historic architecture of Jacmel in the south, to the historic northern hub of Cap Haitien, near the famous Labadie Beach, the potential is immense. There is massive untapped potential here for ecotourism resorts, boutique hotels, and sustainable vacation rentals. The key word is sustainable. The future of Haitian tourism isn't in massive all-inclusive resorts that isolate tourists from the local culture and economy. It's in smaller-scale developments that work with the community, hire locally, and preserve the natural beauty that is the country's greatest asset. Of course, this comes with its own set of challenges, namely the need for significant infrastructure investment in roads, electricity, and clean water. But for a long-term investor willing to take on that challenge, the first-mover advantage could be enormous. So, after all this, is Haiti's real estate market for everyone? Absolutely not. And anyone who tells you otherwise is not giving you the full picture. The risks are real and significant. They include political instability, currency fluctuation, the ever-present threat of natural disasters, and the deep-seated legal and bureaucratic complexities we've discussed. This is a market for a specific type of investor, one who is well-capitalized, extremely patient, and has a high tolerance for risk. It's for someone who is committed to doing their homework and then doing it again. You must be willing to invest not just money, but time and effort into building relationships on the ground. You must work with trusted locals, your lawyer, your notary, your real estate agent, your contractor. This team will be the bedrock of your success. Their local knowledge and integrity are more valuable than any market report. And finally, you must have a long-term vision. If you're looking for a quick profit, look elsewhere. But if you see the potential in the Haitian people's resilience, if you believe in the long-term trajectory of the nation, and if you are prepared to be a partner in its development, then there are very real, tangible, and rewarding opportunities here. This is a complex topic, and we've only scratched the surface. If this deep dive was helpful, or if you have your own experiences with the Haitian market, please leave a comment below. I'd love to hear your thoughts. Your engagement helps us decide where to go next. And if you want more in-depth analyses like this, don't forget to subscribe and hit the notification bell for more global real estate insights.